Hello everyone, in today's video, I'll be fully breaking down the ICT Silver Bullet step by step. This is an amazing strategy if you're trying to get funded with a prop firm because this happens nearly every single day and the win rate with this is very, very high alongside the risk to reward. I'll be giving you guys a full step-by-step trading plan and even walk you hand by hand, step by step on a trade that I took on NAS 100 and explain how exactly I took that trade. But before I get started, I just want to thank you guys for helping me hit 500 subscribers. It might not seem like a lot to you guys, but to me it means a lot because we were able to hit this milestone in such a short time period. Literally in 4 weeks we grew this channel to 500 subscribers. So thank you guys so much for liking, subscribing, watching my videos. I really do appreciate it. I'll also be posting more on Instagram, so do make sure you check out my Instagram in the link description below. But enough of this and let's get right into the breakdown. So first things first, the ICT Silver Bullet is a time-based and rule-based strategy, meaning that we have to follow certain times and rules in order to trade this strategy. Now what I've done to make this a lot simpler for you guys is I've gone ahead and made a small PDF here to simply break down the strategy step by step from the pairs you can trade, the times, essentially everything you need to know on how to trade the strategy. Now, the first thing to note is this strategy requires zero daily bias. You don't need to look at a previous market structure in regards to the trend if it's bullish or bearish. It requires zero daily bias. Now, I'm just going to quickly go over the pairs we can trade strategy and the time so you guys do not get confused. Now, the pairs that we can trade these are the pairs that I like to trade on. The one that I prefer the most is NAS 100. It's the one that I've seen it work the best one, which I'll show you guys on the chart example. But it's GBP/USD, EUR/USD, NAS 100, and SPX 500. Now, when it comes to the times, because this strategy is a time-based strategy, these are the times that you are allowed to trade the strategy. Okay, we have a London session for the Silver Bullet and we also have a New York session. You can see we have the times right here, 3 to 4 a.m. NYC time. This is New York time. This is UTC -4, and it also is the London session. So that's why it's very, very early in the morning. But you can see for London session is right here. London time is 8 to 9 a.m. This is London time. Now for the New York session, it's 10 to 11 NYC time, meaning UTC -4 like I just said previously, and 3 to 4 p.m. for London time. Now something I just want to quickly clear up is you can only take a trade between these times. I'll go into more depth of what exactly these times means for our rule-based system, but something to note is you can only place a trade within this time period. Now getting into the rule-based approach and fully breaking down how the Silver Bullet works. The first thing that we look for when it comes to the Silver Bullet is we want to identify liquidity before the Silver Bullet timing. So this is before these times right over here. I'll be breaking down this trade, which is on the London session right over here, which is UTC -4 time, 3 to 4 a.m. So the Silver Bullet starts at 3 and ends at 4. We can only take a trade between this time period. Now, if I play the market out, first we need to do is actually mark out our liquidity. We've marked out our time. Now what we're going to do is we want to mark our liquidity. You can see we have a high here and we have some relatively equal lows right up here. This is the main liquidity that we are looking for. I'm going to remove these two lines because I do have an indicator that helps me tell when the session is. But if I now play the market, you can see that the timing has started and we are building up on these equal highs. Now, we've identified liquidity before the Silver Bullet timing. This can be in form of equal lows, equal highs, low high, whatever. Just make sure it's liquidity. Now, the next thing that we are looking for is a liquidity sweep. If downside liquidity is swept, we look for buys. If upside liquidity is swept, we look for sells. I'll explain this right now. So if I play the market out and see what type of liquidity sweep we have, you can see we have liquidity sweep to the upside. Now, this means that we are going to look for sells. Why? Because when market likes to take out one side of liquidity, market then goes for the other side of liquidity like so. I'll make this black so you guys can see it better. See, market wants to push down. Why? Because it took one side of liquidity and the market wants to take the other side, which would be this as low hanging fruit of liquidity. Now, our next step that we look for in the Silver Bullet, we have our liquidity, we've marked our liquidity before the timing. We've had our liquidity sweep. The next thing that we want to look for is a market structure shift with displacement. Okay, that's the next thing we look for. I'm going to untick this for now until we find it. Now, market structure shift for displacement. What is a market structure shift? A market structure shift is simply price closing below or above the recent swing high / low. Essentially change of character, break of structure, whatever you want to call it, or you can call it a market structure shift. Now, displacement for you guys that don't know is just a series of candles. You can see this would be a displacement. Why? Because it's a series of bullish candles like here. Essentially a lot of candles in a row with high amount of volume. So market structure shift for displacement, that's all we're looking for right now. We want to have a market structure shift of that low right over there. You can see we have a beautiful market structure shift. I just play the market one more time. You can see we close, play the market one more time. You can see we close above this low given our market structure shift. Why? Because we've closing below the low. That's very, very important. A liquidity grab is most likely when price just sweeps above. So this would be a liquidity grab if it works like this. A market structure shift is when price closes below our structure point like so. Now, we've had our market structure shift with displacement. You can see this is clear displacement. Why? Because market absolutely tanks down. Next thing that we are looking for is a fair value gap that caused the market structure shift. So the most extreme fair value gap, as a lot of people do like to say, and it is this fair value gap right over here. This is the most extreme one. This is the fair value gap that caused the market structure shift. Now that we've marked out our fair value gap, this is a completely valid entry. Why? We've marked out liquidity before the timing. We've had a liquidity sweep. We've had a beautiful market structure shift for displacement. We've marked out our imbalance right over here. You can see this is the best possible imbalance we can enter off. The next thing that we are looking for is our entry. Now, this is the extra stuff that I want to talk about. The first thing I actually want to bring up is balanced price range. If you simply move your imbalance to the left, this is what we call a balanced price range. If there's essentially two imbalances within each other, this is a balanced price range, making this setup a lot more probable. Now, when it comes to targeting and entering the actual trade, you want to enter either here or at the 50%. Either is fine, it just depends on your trading. I'm pretty sure for this trade you could have gone for this and this. I personally like to enter off the 50% like so. Now, when it comes to stop loss, you want to have your stop loss above or below the swing high / low. What I've seen some people do, which is very, very incorrect, if they put their stop loss here within the imbalance, this is very, very stupid and incorrect because you're very easily able to get stopped out. So we want our stop loss to be all the way above here. Now, the next thing that we are looking for is target opposing liquidity. So the first liquidity you have in mind is obviously this equal low right over here. This is the easiest liquidity you can grab. If I quickly play out the market, you can see market wicks us in. Again, you could have entered off of here, or you can enter off of the 50%. The 50% for you guys that don't know, simply get your Fibonacci tool and mark out the imbalance like so, and this would be our 50% right over here because it's the 50% of the imbalance. Now, as I said, this is the easiest liquidity we can target, which is this low right over here. If I go on the higher time frame and look for other points of liquidity that we could have targeted, you can see we have this order block here. We have an imbalance right over here. So this would be a very, very nice point of liquidity. I can't really see any other liquidity within here. It's mainly this order block and that imbalance right over there. Again, I would target here just to be safe because we are targeting quite a long way down, a 1 to 7 risk reward, which is very, very good. If I go on the lower time frame, market tapped us in, play the market out. You can see, just to bring this up, if you were to put your stop loss, if you were to put a stop loss here, which is very, very stupid, and I highly recommend you do not do that, you would have been stopped out. Why? Because it's very, very stupid to do that. You want to always make sure your stop loss is above or below the swing high / low. Now, if I quickly play the market out and see the way price wants to react, you can see price pressure down easy. You could have even held it until the start of this order block right over here, but this would be the best place target just to be sure. Now, just some extra tips and tricks that a lot of people do not talk about is you can only take the silver bullet trade during the silver bullet timing. The actual liquidity sweep and marking out of liquidity, you can even mark out liquidity during the silver bullet timing if there's no other liquidity in the market. That's completely okay, but you can see we had liquidity over here, so there was no need to go into the silver bullet timing and then mark out liquidity. What you really want to do is you want to mark out liquidity before your silver. Now, something that I forgot to mention is that this trade was also called in our signal room, which is also a part of our funding program. If you're trying to get funded with 6 figures worth of trading capital, completely guaranteed, all you have to pay is a single penny. Make sure to check out the link below in the description. We will get you funded completely guaranteed, or you don't have to pay a single penny. You can see right here, this is a challenge that we had passed, 200k account. This means that this guy is now funded with $200,000 worth of trading capital guaranteed, and the best part is you only pay after we fund you with that capital. Again, it's completely guaranteed, so it's essentially no risk, and we also give you the signals, and you can see right over here with your own eyes, they are very, very good. As you can see, a 1 to nearly 8 risk reward trade. But before I end the video, I just want to thank you guys for helping me hit 500 subscribers. If you have any questions, please make sure to leave them in the comments below, and if you have any video ideas too, just leave them in the comments below. But that is the end of the video, and take care.